Good afternoon, gentlemen. Thank you for meeting me today. I'd really appreciate it if you could take me through the running of the first year.
Hello, Mr. Miller. I'll take you through the first year and our strategy for it.
As we were new to the market, we felt it was in our best interest to play it safe to begin with, and as a result of this, we did not invest too heavily in R&D and marketing, and always made sure we had cash available. We also made sure we were always able to meet demand by having plentiful capacity. We didn't want to dilute the owner's equity too much, although we needed to raise capital to increase our spending on marketing and research and development to increase our market share. Unfortunately, for the first year, the team was unable to correctly use the burn rate, and as a result ended up at times paying for much more capacity than was required. For example, during the first quarter, the average utilisation was 49.98%. Essentially, we were paying for 50% more capacity than we needed each month, which ended up affecting our cash flow and limiting how much we could invest into marketing and research and development. The most ever utilised in the first year was 58.5%, and the least was 37.73%. At this point during the trading period, there were debates on how to approach the upcoming year. One member suggested better management of burn rate to allow for greater investment in research and development and marketing, while another suggested that we should continue to play it safe, and pointed out that we had no real problems with cash and our market share had grown steadily over the first year.
Thanks for that, James. Harrison, would you mind taking me through year two?
Absolutely, Mr. Miller. I'll take you through the second year and how we changed our strategy.
It was drastically different to that of the first. There was a realisation that the company was not performing as well as was expected, and a change had to be made. The business had two main objectives for the first 2 quarters of the year. One, to become more efficient with capacity and make sure the burn rate was always as close to the maximum demand possible at all times with a small buffer. 2, to increase market share to at least 20%, using only cash generated through sales. In order to achieve Objective 2, the first objective would also have to be carried out. During the first year, too much cash that could have been reinvested was going to waste on unnecessary capacity. It was agreed at this point that if there was no measurable benefit by the end of quarter 2 in market share, expected at 15% or higher, ROE and cash flow, i.e. one that the team could measure the difference before and after the set time period, Daniel and Ward 2006, then another opinion would be considered on how to approach the final 2 quarters. If the first 2 quarters' objectives were met, we then planned to cut costs and drive up profits while maintaining a steady market share. As you can see from the graph, our market share grew dramatically and then began to drop slightly and level off. This happened as a result of a group discussion where we felt that our market share was an acceptable level to progress with the next part of our revised plan and boost profits. We subsequently kept the market share at 20% and lowered costs massively. This created a situation where, although other companies were still gaining a market share, they were doing so at great cost, and therefore we feel this is where we had an advantage. In the second year of trading, we met expectations and managed to beat all of the competition in the market. There are a number of reasons that we feel this year was much more successful. Firstly, the constant monitoring of burn rate and capacity provided an invaluable cost-cutting method. In the second year, average capacity utilisation across the 4 quarters was 95.32%, a massive 47.45% improvement on the previous year. However, there were occasionally problems with the capacity due to our attempts to keep the burn rate so close to the maximum demand level. For instance, in quarter 1 of the second year, because our burn rate was so close to demand, there were occasions where our market share would grow and with it our demand, but our supply would not be enough to meet it. We managed to avoid too many problems with this by slightly increasing the buffer on our burn rate for the next 3 quarters. And as you can see, in the final quarters we managed 96.35% capacity utilisation with no problems whatsoever. We feel that the weakest area of the 2 years was research and development. If we were given the same task again, a point would be made to initially start investing in R&D quite heavily to build a solid platform from which marketing could add to. In our market we finished this 2 years ranked 4th in R&D, yet we still managed to stay dominant in the last 2 quarters in terms of earnings. Therefore, I would argue that if we had had a more solid total R&D spend in the last 2 quarters, we could have dropped all marketing and R&D and boosted profitability even more than we managed to achieve. Another possible way to improve our standing could be to not issue any shares to investors and only issue a small amount, no more than 10%, to employees. We feel that this could have been a better strategy, as we believe it was possible to raise the necessary funds for investment without issuing shares to investors. This would mean we could issue shares to employees without diluting our founders' share too much, which in turn would keep employees happy and hopefully stabilise our market share. The final matter on which we as a team feel we could improve upon is our coordination and planning as a group. We feel that more discussion is required during the planning stages and achievable, measurable goals need to be set. However, as Ordóñez et al. Suggest, we should be careful not to narrow our focus too much and ignore other business functions in favour of one or two specific goals. We have also managed to achieve a 300% increase from 0.09% to 0.3% of a return on equity over the 2-year time period. We feel that this is a success for both us as the team in charge of the company, as well as a significant return on your investment as owner of the business.
Thanks for your time today, gents. I really appreciate it. Well done for winning the seminar group. I will definitely be continuing my business with you in the future.